G'day traders, Stacey Burke from Stacey Burke Trading. We're going to just do a review of the session pump and dumps, what to look for, how to execute, when and where we might see them, and why you can use the 1-minute charts if you're just looking for this setup. Let's take a look. Now obviously on gold, a lot of traders have been watching that. For those who have that available where they're trading and they have reasonably decent spreads. Yesterday we saw a market that, if we just take a look at the hourly, dropped down for right from the beginning of the day, right in through the London session before it made a reversal low. And again, you'll notice that low was made in that 1300 hour. I've spoke about that before. That 1300 hour will often be a turning point on all the currencies. 1300 chart time. That's roughly 7 o'clock, 7:30 New York time, winter, daylight, whatever, it's New York time, 7:30. And that's sort of the halfway point. But coming back to how to recognize or look for the pump and dump opportunities. Now, we've talked about the 1, 2, 3s on any time frame. Whenever you see 3 bars or 3 bull candles, 3 bear candles, it might be 2 bull candles and a bear candle and a bull candle. Whenever you see that, especially in a session open, you need to be thinking we're in a pump type situation. So we see the low of the day was made just prior to that US 12 candle window. Now there are opportunities obviously on the way up, and there are opportunities on the way down. Now we were in a down market. We broke the previous day's low. Now that's a trigger for me to be paying attention to a market, because remember, whenever there's a breakout in any market, it doesn't have to be gold. We're going to look at a couple of pairs, but there's a gap. There's a space here that breakout traders from other time frames on the day itself, hourly, 4-hour, 15-minute London session, whatever that may be, there's a gap prior to the US session that is at least 50 pips plus back to the gap. It was actually 100 pips back to the gap from the low. That will most likely get filled. And why is that? Because nobody gets a free lunch, which means that profitable traders can get stopped out, but they'll fill that gap. But this turning point, we have this is an hourly chart, 2 hours up, first hour of the US session. So we have 1 hour, 2 hours before that second hour opens. So coming back to just looking at what happened in London, we have traders who may have shorted it at double zeros on the M top. We had London put a high in and a low, and then they went back up into. So we've got a low of the day prior to the session starting. That's the low of the day. Pop up peak formation. They break the low. That means the low potentially is not in place yet because they've gone lower. They break down through double zeros and then march back up in one push. They put a lower high in, they break out of that lower high, so then I call that level 1. 1 push, 2 pushes, 3 pushes, and an M pattern above double zeros. We know there are stops below the low of the day. They haven't taken out the previous day's low. And of course that market breaks down and continues its downward existing trend. We go down and we go sideways. As many traders last night observed the consolidation, they saw the lower second tap to the low of the day at the timing window to begin that run back up in the US window. When the market starts to go vertical, the first thing I'm doing is looking at London. I want to know who's in the money, so I know up somewhere around double zeros, that lower peak formation, that could be where we're headed. But more importantly, I'm looking at the time. So people often say, how do you know if the high's locked in or the low's locked in? Well, price is behavior, but the time of day. Remember, we talk about this, time compression. If they haven't cleared out the stops, your technical analysis and all this is irrelevant. It has nothing to do with that. They're going to keep going until they clear out the money. So if you have these lower highs in place, and we're 30 minutes in, and there's still another high to go, then that hour ends. That's the high of the hour, and then the next hour goes before the second hour. New York hasn't opened yet. They're going back up. It's the time of day. The time of day is what's important. They're going to go back up. They went back up. They hit the stops. They hit the stops on the London shorts, 3 pushes, double zeros. They engulfed the high bull. So whenever you can draw the low bear, we have the low of the day, the low bear. That doesn't mean I'm getting in there. Why? Because I've got a couple hours before the session begins, or an hour. The closer I get to this session, though, and this is confirmed, I would be looking to go long because I know they're going to get the people in the money. If I get in here, I've got to sit in through this sideways and a second revisit. This is level 1. So somebody asked yesterday, good question, if there's a new low, is that level 1? No, the new lows and new highs have nothing to do with level 1. It has to do with the consolidation at the low or the high of the day. If there's a consolidation and they break out of that consolidation, now we have a market that's, when they break out, that breakout is inside of level 2. Breakout pullback, and they continue to go higher. We're in level 2 now. This is level 1 below double zeros. They break out of those peak formations and continue to go higher. We're in level 2. Where's level 3? Level 3 is back up where the move started down, above double zeros. That's level 3. Why? Because that's where the peak formations were that consolidated volume at the high before they moved down. Level 3, level 2, level 1. Level 1 becomes, level 1 on the way back up. We go back inside of level 2, and it's also on the way back up. When you get higher lows and higher highs, creeping trend, and a vertical move, you have to be thinking this is going to be fuel for a move right back down. Now, are they going to go to the low of the day? I don't know, but I do know that in the majority of cases, they will revisit where the move started from the low of the session. So this may go all the way through the low of the day, but my initial target is always somewhere in the area of this lower area. I don't go for every single last pip. I'm happy to take 10 pips off the low. If it's falling strongly, I may just trail that, and as it hits double zeros, I might lock in 15 above that. If it's falling fast into my target, it takes me right out. Or if it starts to consolidate before it gets to the low, I'll just close the trade. I'm already up. I'm not worried about 10 pips either side. I'm going to get out. But more importantly, coming back to understanding how do I know when the higher low is locked in? Well, we have our high bull, but most importantly, 15-minute rotations. You need to understand the 15-minute rotations. If we have 3 hours, 1 hour, 2 hour, the third hour takes out the high. We have 15 minutes to the high, and we have an engulfment. Most likely, this next 15-minute candle will have a pin on the top. A pin on the top, which means that when I get my second entry, that first 15 minutes to the high is the trap carrying traders chasing the momentum, chasing the break of the hourly high, 5 minute, 1 minute, whatever. But when this breaks down, this 15-minute bar is going to be a pin, which is what I'm expecting. We're trying to sell the high of a pump and dump once price locks it in, but you need to be thinking in terms of time rotation. 15 minutes to the high, second 15-minute bar breaks that high, triggers 15-minute entries, and reverses, then pulls back inside of that double zero for an engulfment, which gives us our micro M structure to begin our move back down. And when these markets start to fall, I cannot reiterate, do not counter trend the market once it locks in and reverses. This is textbook pump and dump. Your technical analysis, your retail mindset will tell you this is an uptrend. They're going to retest the high. An excellent comment from a trader yesterday. He was afraid of getting stopped out, and he got out of the trade with 17 pips. Great trade still. Sometimes I will let this market fall, lock my target in, and walk away with my trade at break even because I know I can stuff the trade up. Other times I will let it fall, take my 50, 75 pips, whatever that is. But when we're on a level 3 and we're up high on a day 3, I will leave that market and I will shut it with I'll put some targets in place, but I'll leave some positions in at break even with plus 10 pips at least in case there's a spike or anything. I don't want slippage, but I will leave a few positions in overnight and just get out, or follow those all the way through. When it's level 3, day 3, they will run, and those are days that you can really lock it in. So I don't want to sit at the screen and second guess anything. I'll just walk away. I'll lock some of it in and leave some to run because they can keep going. But on these session trades, this is the minimum target, the low of the day, double zeros. Take the first run. If you leave a trailer in, they're putting a base in, and they're going to revisit that breakout. But this is the textbook pattern. And then they trap people counter trending, and then boom, the vertical moves straight through the low of the day. The pound is a brilliant example of a market that's already running when we get to the session open. So the market went down, put a low in place in London. We'll zoom this out. They put a low in place in London. They hit the previous day's low. Breakouts, pull back. They break structure, pull back, coil, and go vertical. This market is on a run as the session opens. This is a textbook great example because traders who are getting long at the beginning of the session now are buying at the high on the third leg of this move. They get up there. That first pin is our high. Whenever there's a pin, draw your high. Then they go and proceed to lock the high in. 1 push, 2 push engulfment, 1, 2, break in structure, and 3. This is the safe entry. How do I know the high's locked in? Because they put a high in place and they locked it in. They push into it 3 times, they break down and pull back in engulfment. That's our bow and arrow for a move back through at least to the low of where that move started. But this is a textbook setup for a measured move back at least 2 full expansions of the range. In this case, it went 3 full expansions. Pretty much 100 pips, 75 tradable for sure. But this is a great example of a market that's running already, and that tells you that traders are going to get caught buying high for the reversal. The euro is another example. It's an inside day. They didn't hit a previous day's lower high, but it reversed, and it's on the run on the way into the session. Remember, we talked about ramped volume. If you see ramped volume into the last leg running up to the high, you have to be suspicious of pump and dump activity. These fills chasing the fill on the long side into the open, chasing that momentum. If they're on longer time frames, they're buying high. They're buying high. If they're on the 1 minute and they're smart enough, they'll be getting out when they see this peak formation on this bear candle. It doesn't quite get to the numbers, but they drop back and they go up 1 push, 2 push, 3 pushes. There's our micro M structure. I just mark off the high bull or high bulls. Break down, pull back, engulfment. I'm in the market. That's the textbook setup. You're going to see this 1,000 times, and if you don't start hitting these trades, you're going to say, how did he get in? But let's look at the timing of this. Again, 45 minutes, 3 15-minute bars. 15:45, which is 8:45 New York time. They break structure, they pull it back. We're into the new hour. Time compression, new hour. Third hour's up. The new hour opens and starts the reversal. Accumulation, the markup phase, the distribution, and the crash. So if you're not in the move up, if you come to the screen, you're like, oh, I should have been here 2 hours ago. I missed the move. Remember, up by the escalator, down by the elevator. When they pull the bids, you're done in 45 minutes, and you've just made 25 to 50 pips, depending on which instrument you're trading. You've got a 1 bar stop. So 1 bar up high, you're looking at 15, 20 pips max, probably 15 on the euro. And you're targeting 25 to 40 in that range on the way back down. So we talked about the Japanese yen yesterday taking out the highs of the month, and day 3, level 3 trades. So level 3 into the move, taking the market higher, buying with the blow off move, but well aware on level 3 we could be at a reversal situation heading into the US session. We've locked in the high. We have the half Batman pattern, so pump and dump again prior to the US window opening. This market rolls over. Okay, so if traders have missed the short trade, we get the pump, lock it in sideways, and the rollover for another 25 to 50 pips in line with the original move down out of the peak formation. So again, there's trades in both directions. You think you've missed the trade, you counter trend this move thinking that's going back up because the trade was long, even though you're buying into the peak formation. This is a peak formation. Went vertical and reversed. Peak formation. Don't counter trend the peak formation. This is a level 2 trade coming out of here. This is the 3 push pump into the level 2 trade for the continuation back down 75 pips plus. Keep it simple. So there's trades. If you were to buy this, you should be aware that you're buying a creeping trend. That should be your first signal. The market's already broken down. I'm looking for the pump. This is a 3-hour pattern. 1 hour down. Middle hour's back up. Towards the end of the second hour, into the third hour, we're rolling over. This market's going to go vertical. We have higher lows. We have a peak formation locked in an M formation locked inside of the original peak formation in the level 2 trade. So for people who are going to ask, what do you mean by level 2 and level 3? We have 3 levels of rise. That could be 50 pip boxes. It could be 25 pip boxes. What do you need to do? You need to go and look at the original move up. We had 1, 2, 3 levels of rise, 75 pips. They've locked in the high. They've triggered the high of the month. They've rolled over. We have a level 2 trade. 50 pips straight down. 1 push, 2 push, 3 pushes, 25 back up into the trend, the M structure. The larger M, the engulfment, and the vertical move back down to where that move started from Friday night's U.S. session. So again, there are trades in both directions. You can see that the level 3 itself became a pump and dump the whole day. This whole level 3 trend trade becomes the pump and dump. So again, for trend traders who are in this move and they're buying this with the trend, I said yesterday, make sure you're taking money off. On a level 3 day, I'd be taking money off on any of these trades with the trend, well aware that on level 3, they could reverse this market. Level 3 will typically hit high of the day and low of the day, consolidate inside and go sideways, and that's the telltale sign for a reversal day potentially, depending on the setup in the template. We see the exact opposite this morning. We see the dump into the previous day's low. So this pin hammer takes traders lower. They went up to the 50 level, locked it in, broke structure. Okay, so people say, how do you know the high's locked in? They spent 35 minutes, 40 minutes up here, triple top, engulfed it, broke down inside, and then 1 push, 2 push, 3 push, the pop up into the high for the short trade. They sell this down, dump, 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 3 pushes at the low. And again, timing. It's all about the timing. The time of this reversal is 15 minutes into the second hour. The next 15-minute bar opens up and comes back inside and starts the march back up. Do I know this is going to go long? No, I don't. But if I'm going to buy this inside, based on that timing, there's my pin hammer after the pullback on the third leg down on a new 15-minute bar. I have a very tight 1 bar stop. When I say 1 bar, if I get in here, anywhere in here, my thesis is that it should clear this last lower high very quickly. That's a 1, 2, 3 into the low. It needs to clear that. Where's my stop going? Right at the low of the day. So I want to buy low and sell high. If I'm selling, I want to sell high. After they go up, 1 push, 2 push, 3 push, there's my high bull. If I sell in here, my stop's going above the peak formation. That's it. That's as complicated as it gets. What am I going to do? The minimum I'm going to do is set at least twice that range as a potential profit target. But if price behaves accordingly, we get to double zeros. This could go 25 pips further past the double zeros. It might fail at double zeros. I might just take it out at double zeros. Depends on how long it takes to get there. Whatever that is, the velocity of the move, the strength of the move. These are all decisions you can make prior to taking the trade or in the trade itself, but I'm going to be taking money off the table. The market proceeds back up, comes back down, and now we're heading into the next session. So you can see the same microstructure, dump, 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 lock in the low, and the pump begins back up again. So we may be seeing the yen, which is in a carry trade situation. Don't know what it's going to do. I have no idea. But there are pump and dump opportunities whenever the market moves 25 to 50 pips in one direction. It doesn't mean you've missed a trade. It means that the market potentially may be moving and at some point give you an opportunity to participate in a pump and dump. This is an ideal situation. They locked in the high and rolled over into the U.S. The first leg down was obviously the easy trade. If you sat around and waited for an hour, you got the second trade. There was a trade on gold, 1 hour up, 1 hour down. So time of day is what will clue you in. Who's in the money? Where are stops potentially sitting? Double zeros, 50s, how many levels of rise and fall? How long? What time is it? 1 hour up, there's a high of the day still, and high of the session still there. Second hour opens up, 15 minutes to the high. Second 15-minute bar taps the high and reverses at double zeros after stops have been hit. Keep it simple, traders. There's trade setups on every single one of these pairs, and there's going to be simple setups again today. Keep it simple. Keep your stops tight. Lock in the profits. Get off the screen. Keep it simple. Have a great trading session, and may the markets go with you.